Money decisions don't usually happen on spreadsheets. They happen in moments. At the gas pump. At the grocery checkout, late at night on a phone screen. When exhaustion lowers defenses and convenience feels like relief. Short-term finance lives in these moments, not because people are careless, but because the human brain evolves to survive today, not optimize next year. In the United States, short-term money choices are often shaped by speed. Paychecks arrive, bills cluster, prices move, and life keeps coming. Most people aren't ignoring the future. They're reacting to the present. When rent is due, when the car needs repairs, when a child needs new shoes, the mind narrows its focus. Psychologists call this scarcity tunneling. When resources feel tight, the brain prioritizes immediate stability over long-term outcomes. It's not a flaw, it's a survival response. Modern financial systems amplify this behavior. Credit cards, buy now, pay later, buttons, instant approvals, and overdraft coverage remove friction from spending while preserving the feeling of normalcy. The transaction feels small, the consequence feels distant. Short-term finance thrives in that gap between now and later. The brain discounts future pain because future pain isn't loud yet. There's also emotion. Short-term spending often isn't about the thing being bought. It's about relief, control, or identity. A delivery meal after a long shift isn't laziness. It's emotional regulation. A new phone upgrade isn't just technology. It's participation in modern life. In a culture where success is visible and constant, money becomes a way to keep up, not get ahead. Short-term decisions become social decisions. Income volatility plays a quiet role. Many American households don't experience smooth, predictable cash flow. Hours fluctuate, tips change, gig work fills gaps. When income is uncertain, planning feels theoretical. People adapt by staying flexible, keeping options open, and solving problems as they arrive. Short-term finance becomes a rational strategy inside an unpredictable system. Time pressure compounds everything. Financial decisions are rarely made in calm moments with full information. They're made between meetings, during commutes, while multitasking. Cognitive bandwidth is limited. When mental energy is spent on work, family, and stress, financial decisions default to habit. Habits favor what's familiar and immediate, not what's optimal. This is why many people know what they should do with money, but don't do it consistently. Knowledge isn't the missing piece. Environment is, systems are. The short term always feels real, because it is. The future feels abstract, because it hasn't arrived yet. Short-term finance isn't about irresponsibility. It's about living inside systems that reward speed, ease, and now. Understanding this shifts the story from judgment to context. When we see how human psychology, modern financial tools, and everyday pressure intersect, short-term money behavior stops looking like failure and starts looking like adaptation. Short-term finance is also shaped by memory, not the kind written down, but the kind stored emotionally. Many Americans carry financial memories from childhood that quietly influence how they act today. Watching parents argue over bills, seeing a card declined in public, feeling the relief when money finally came in. These moments teach lessons long before anyone understands interest rates or budgets. The brain remembers the emotion and tries to avoid repeating the pain. Because of that, people often prioritize certainty over efficiency. Paying a bill immediately, even if it causes strain later, can feel safer than waiting. Keeping a low bank balance but zero late notices feels like control. Short-term decisions often aim to eliminate anxiety in the moment, even if they introduce stress down the line. The trade-off feels worth it because emotional safety now is more tangible than hypothetical stress later. There is also the role of optimism. Humans naturally believe tomorrow will be easier than today. Next paycheck will be bigger. Expenses will slow down. Energy will return. This optimism bias isn't naive. It's necessary for motivation. But financially, it encouraged short-term choices built on future hope. Small gaps are bridged with the assumption that things will work out. Most of the time, they do, just enough to reinforce the pattern. Marketing understands this psychology deeply. Financial products are framed around immediacy and ease. Instant. Flexible. no impact today. The language mirrors how people already think. Short-term finance feels manageable because it's packaged as temporary. But temporary solutions have a way of stacking quietly, not because people can't see the math, but because the math doesn't feel urgent yet. Social comparison intensifies everything. In American life, money is visible everywhere, but discussed almost nowhere. People see vacations, renovations, new cars, and nights out, without seeing debt, trade-offs, or stress. Short-term spending becomes a way to stay socially aligned. Falling behind feels riskier than paying later. The brain treats social exclusion as a threat, and money becomes a tool to avoid it. Then there's fatigue. Financial decision-making is repetitive. Rent, utilities, subscriptions, insurance, groceries, the same choices over and over. Over time, the brain looks for shortcuts. Automatic payments, one-click purchases, minimum decisions. These systems reduce mental load, but they also lock in short-term patterns. Once a behavior runs in the background, it stops being questioned. Importantly, short-term finance is not evenly distributed. The less margin someone has, the more expensive short-term decisions become. Fees, penalties, higher prices for convenience. The system charges more for urgency. People respond by becoming even more short-term focused, not because they want to, but because flexibility is limited. This creates a loop that feels personal, but is largely structural. Understanding short-term finance means understanding that people aren't failing money. Money systems are interacting with human limits. Attention, emotion, time, and uncertainty all shape behavior when those forces are acknowledged. Financial choices look less like mistakes and more like responses to the environment people live in every day. Short-term finance is reinforced by how time feels to the human brain. Tomorrow feels close, but consequences feel far. The charge made today blends into routine, while its impact hides inside future statements. This time gap changes behavior. When the cost is delayed, the decision feels lighter. When the benefit is immediate, it feels earned. The brain weighs now more heavily than later, even when later is objectively larger. In American life, short-term thinking is often framed as personal weakness. But look closer, and it mirrors how systems are designed. Bills arrive monthly, not yearly. Prices update constantly. News cycles refresh every hour. The environment trains attention toward the immediate. Long-term thinking requires space, stability, and quiet. Those conditions are increasingly rare. Short-term finance is also shaped by trust, or lack of it. Many people have experienced sudden changes beyond their control. Layoffs, medical bills, market shifts, policy changes. When the future is proven unreliable, it stops feeling worth planning around. People learn to extract value when it's available. Spend when you can. Use credit while it's open. Secure comfort now, because later is uncertain. This behavior is often labeled reckless, but it's grounded in lived experience. There is also a subtle identity component. Money choices communicate who someone is to themselves. Being generous, being resilient, being independent. Short-term spending can affirm these identities in small ways. Picking up the check, saying yes to a trip, helping family in a tight moment. These decisions strengthen relationships and self-image, even when they complicate finances later. Humans prioritize belonging and meaning, not just efficiency. Short-term finance thrives on invisibility. Digital money doesn't feel like money. Swipes, taps, and auto-renewals remove physical cues without the sensation of cash leaving. The brain registers less loss. Spending becomes abstract. This abstraction lowers emotional resistance and makes repetition easy. The absence of pain doesn't mean absence of cost. It just means the cost is quieter. Stress changes perception. Under stress, the brain shifts into problem-solving mode. It looks for immediate fixes. This is why financial stress often leads to decisions that increase future pressure. The goal isn't optimization. It's relief. Short-term finance offers relief fast. Long-term strategies rarely do. The nervous system chooses what comes at first. Importantly, most people don't experience short-term finance as a choice. It feels like default, the path of least resistance. Systems are already set up. Payments are already scheduled. Habits are already formed. Changing direction requires energy that many people don't have at the end of a long day. So patterns continue, not from ignorance, but from exhaustion. When we zoom out, short-term finance becomes less about individuals and more about alignment. Human psychology is short-term by nature. Modern financial systems are short-term by design. The result is predictable. Understanding this doesn't solve everything, but it changes the story. It replaces blame with clarity. And clarity is the first step towards seeing money behavior for what it truly is. A reflection of how people navigate time, uncertainty, and pressure in everyday American life. Why do we keep making short-term financial decisions, even when we know we shouldn't? Well, a big reason is that it often seems to work. The bills get paid, the accounts don't crash, and life goes on. Our brain registers this as a success, not a risk, even if pressure is building up underneath. There's also a cultural element. We celebrate speed and hustle. Solving a problem right now feels productive and powerful. Waiting to analyze options can feel like weakness. So, taking quick financial action feels like the right thing to do. Our money is also fragmented. It's spread across so many apps, cards, and accounts. Each little piece feels manageable, so we never see the full picture at once. We make decisions locally, in isolation, without seeing how they all add up. Then there's normalization. If everyone around you is carrying a credit card balance or using payment plans, it just starts to feel normal. It stops feeling like a risk and becomes the standard way to manage. We often follow what feels normal, not what's actually optimal. Many of us also fall for the myth of future clarity. We tell ourselves, we'll make better decisions later after the next raise, or when life is less chaotic. We treat the present as a temporary mess, but that temporary state can last for years, and the perfect moment to start planning never seems to arrive. Emotionally, short-term spending can protect our dignity. Keeping up appearances feels essential for our self-worth and our relationships. The cost of appearing stable is pushed to a later date, where we can deal with it in private. It is crucial to understand that this is UND because people are bad with money or do UND care. It's because we care deeply about stability, belonging, and finding relief in a complex world. Short-term finance isn't a moral failure. It's a human response to systems that move faster than we can. Understanding this is the first step toward building healthier habits. Thanks for watching. Ever feel like you're just patching things up financially, trying to get through the day? It's a common feeling, and it's not a personal flaw. It's a human response to modern pressures. Understanding why we make short-term financial choices doesn't magically make them disappear. Real change happens when the pressure eases, when we have more time, when life slows down enough to let us think. Until then, these quick decisions are the tools we use to manage daily life. In places like the United States, money often acts as a shock absorber. It cushions us from inconvenience, uncertainty, and stress. Think about it. Paying a little extra for faster delivery, using buy now, pay later for some flexibility, or quietly paying a fee to avoid a bigger hassle. These don't feel like huge, dramatic choices. They feel practical. They help us get through today. But here is the contradiction. The very things that reduce our stress right now can actually increase it down the road. The thing is, we don't experience time evenly. Today is real and immediate. Next month is just an idea. Our brains are wired to react to what we can feel in the moment. Short-term financial choices feel like control because we see the results right away. The long-term consequences, they're just theory until they show up on our doorstep. Financial systems often don't get this. They're built for people with stable incomes, consistent attention, and perfect plans. But real life is messy. When those perfect systems meet real, messy people, there's friction. Short-term financial behavior is what fills that gap. It's not a mistake, it's a workaround. It's also fueled by hope. We believe we'll handle it later. And usually, we do just enough to keep going. This makes us feel resilient, but it also normalizes the pressure. Just surviving feels like a win, even if it's expensive. Slowly, a tight budget becomes the new normal, and the constant stress just becomes background noise. What we often overlook is the incredible skill this takes. Juggling due dates, managing cash flow gaps, making things work with what you have. This isn't passive. It's a full-time, high-effort job. Many people are far more financially savvy than they think. They're just operating in survival mode, not optimization mode. So, let's change the conversation. Instead of judging these choices, let's get curious about why they happen. Let's look at the systems and pressures that shape our behavior. Because money isn't just about money. It's about time, security, and who we are. Understanding this won't solve everything, but it brings dignity back to the conversation, and that's where real change begins. Thanks for watching. If this resonated with you, consider subscribing for more conversations about money in real life.